For now, let's cut across to Madhabi Puri Buch, the chairperson of SEBI, who's speaking at the Global Fintech Fest.
Under certain market conditions. Now, are you being conned? Right? So, if your business model is going to rely on a black box which is not open to sunlight for disinfecting, if it is not capable of being validated and audited, and your claims cannot be audited and validated, it cannot be permitted. But if it can be audited, can be validated, nobody is happier than us to facilitate new and innovative offerings in the market. So this is the second checkbox. One was anonymous, the other is validation of your claims. If you're unable to validate, your business model is under threat, because when the regulator shows up, this will not be acceptable. The third is back to my favorite slide. When it comes to financial inclusion, most regulators in our country have very, very supportive regulation. Okay? So for instance, let's say SEBI itself, in the mutual fund industry, up to 50,000 rupees, cash transaction is permitted. Up to a certain limit, PAN number is not required. You just need something called a PECRIN number. So when it comes to financial inclusion, the whole objective of the regulator is aligned with you. So if you are operating at the bottom of the pyramid, truly operating at the bottom of the pyramid, it's not just a nice tag to have, and you can demonstrate that these are the kinds of limits that you have in terms of your offerings, the regulator is more than delighted to be supportive and to make it easier, simply because that is an important part of our agenda always. So this is the third checklist. If your business model facilitates financial inclusion, then to that extent that you have those citizens within your fold, the regulator is bound to be very supportive. It will be a sustainable business model. This is one of the key requirements of every regulator. I refer to it as the Abhimanyu complex. If you have a business model which relies on the assumption that once the customer is in, it's very hard for him to get out, we don't like it. So building barriers to exit, again, if your business model relies on that, it is unlikely to find favor with the regulator. It's a very important principle that we follow. And therefore, as I said, when the regulator shows up, you will be vulnerable to regulatory risk, because the regulator will say a person who has ease of entering has a right for ease of exit. If you make it hard for him to leave, we will not permit you to make it easy for him to come in. We do not want Abhimanyus in our market.